And we can put some fibs on it now too. We'll see that it's not really developed too well. It's still got ways to go to hit levels that usually would cause a major reversal. But we're kind of stagnating through the 61. It's been grinding above it. Everything that's ever happened above it's come back down to it. But then when I think about it, I'm like, do these people, are they winning right now? You know, well, at the end of the day, they're being treated very, very poorly for trading a level that's supposed to have just come down like that if it works. And I mean, obviously this level, you know, has rounded people up instead. When I look at like where the volume is, we can see that so many people have gotten caught up trading the 61 and liquidated on it and trading around it that they're all in this node right now. And I mean, and typically when this is an indication, it'll mean that it goes down. So a lot of those people are probably suffering short sellers. And that my idea about it is that they continue to suffer and we get above the high of day and crack into the 261. Like maybe we go from 261 to 100 like that. Like that would make a lot of sense if we went 127 to 61 and 261 to 100, you know, or at least 261 to here. And I know that that trade can be protected, that it doesn't have to go all the way down to here. That even just this little distance would be good enough. That stops and profit at that point can protect the trade if it goes wrong from there. Which I think there's about a 60% chance it goes wrong from there. But yeah, if there's a chance that it doesn't go wrong and it keeps going down, I mean, you don't want to lose out on that. So being able to take some off here and being able to let the rest run down to the bottom is a good way to strategize about in the event that if it blesses us with that level up there. It's not that it has to get there, but in the event that it does, we can analyze the probability of it being able to fall back to that high in this one. Now there's certain things that can happen along the way that make that less attractive. Like let's say right now it goes down to hit it. Well, then it's fucking played out. We don't have to hit it anymore. If we go up there, it doesn't actually matter. We don't have to come down anymore. So we can see right now that we're lingering on maybe hitting it. If we do, then this goes to shit. And if we go up anyways, it doesn't really matter. But in the event that this continues to make a W all the way up to that 261, it can then present an opportunity only if it doesn't. So now it's made that less attractive to come down. Now I'm more attracted in just coming down to this high. Just it makes it less bearish in the long term if we've already kind of cleared up this area. Like obviously we're not out of the woods yet, but if we leave, we can come back down to that high. And I'm like, that's the most certain thing is the drop from the 261 back down. If there's one thing that we have to monitor is the relationship with the POC, the tip of the triangle here. It's like reluctance to return to it, or an interest to return to it, like an indication or a variable that we need to like kind of study. Because it can indicate as to whether or not we're interested in leaving the red line, that POC, and which is basically the 61. This kind of motion here, it makes it seem like it's more neutral than it really is, and you want to know what I think that just does? Is it makes it okay for people to make the node bigger. And if there's one thing that they know, and one thing that they're allowing, is for all the people to trade in the tip of the triangle, all the people to be in that node. It's not like they're everywhere, anywhere else, you know, like all the people are right here. It's the only place that they've really been able to get in, you know. It's not really moved around too much today so far. It's been contracting its volatility, taking it away, reducing its volatility. The top line is the most attractive to get to the 261. We'll have to break it. Looks like it's brewing to get to the other side of the node. And whatever volume we put underneath the 188-200 could serve as the boundary or platform that we use, right? To fall back from the 261. So now we're coming back down to test the 188-200 for the first time. It's not even from the 261 though, that's where we want to be, 261. Only just past high of day. Like high of day could turn into a B point and literally use fibs. It's like every other day. I don't know why it changes. Nothing changes until we see the reason for it to fall. There's gonna be hundreds of points like every other day on the table at some other strange period. As per usual, it's not an uncommon factor, so I see that it continues. They're milking it. Like, the institutions are milking it, literally. Everybody thought it must come down today, didn't they? And it's fucking all-time high again. Again. Even during market hours, short term, you know, we're up 200 points, it drawed back a little bit, and everybody thought it was dumping forever. It must come back, right? Now we're like 2 pages above the old all-time high. Hundreds of points where people thought that because it was high, it's just going to be a few more points, right? Just a dozen more points, just a little bit. And it's like, it's actually getting faster. It's actually going harder as we're getting higher. And I mentioned that that would happen. It's all about taking it literally. Like what I'm saying, not what the textbook says. Like if I wrote down what I'm saying in a textbook, it would be wrong in the future. It's like those textbooks could only be used for the day that they're relevant. When people think that there's a certain way it should be done next week and that they can strategize for it now, they become fools. Because next week is not now, you know? And there's no variables from next week yet. So how do you make a strategy that you're confident is going to work for that time? I just don't believe in it. I don't have faith in that. I believe it's a means to an end, that if you keep repeating it, it'll soon bite you in the ass. And I'm on the market side when it comes down to that. You know, I really believe in the market's ability to end every strategy that's repeated enough. And that's what people want to do. They think the more that they repeat, just like at their job, that they'll get paid more, right? The 2618 is related, in my opinion, to the 188 right now. And when I say these things, it doesn't mean that they're forever. People want it to work like that always. Like when I say, oh, the 61 works to 61, they think that that's my strategy and that's how I always operate. I can't give you a finite answer on that. Like it's incredibly uncomfortable because it's like, hey, this is how it's going to work forever. And now you're going to assume that every single time that you see that I'm going to be doing it. And I'm going to expect it to fail like 40% of the time, perhaps. But you know, that's hard to say that it, you know, it's something I look for. Like this one here, we wanted to get to it so we could get through it. There will be times where, like yesterday in the video, the first 61 of the day was actually right here. And it was a beautiful 61. It went 61 to 61 and they worked. So where people woke up yesterday and they were able to get a 61 to work and it rallied up off that 61, today's is nothing like yesterday. So wherever anyone thought that yesterday, you know, the key to success was only if we took the 61, it held all day. Now anybody that took the 61 today has been like rounded up and stomped on and like really like abused badly for thinking that the value from yesterday was going to be value for them. And they tried to repeat yesterday's value, and today they are at the other side of one of the worst trades on the chart. So it really just shows that we have to understand, you know, how the market's using the tools rather than that the tools have to be used the same way every time. I think that it's something we have to adapt to depending on the market conditions and the market environment. It'll determine how we use the tools and which fib levels we find important and whether or not we think that they're going to reverse at all. Like I've been less inclined to think that they'll reverse. Like when we came down to hit this B point, I was like less interested in the 261 actually being able to have an impact. And you know, the more and more we get on with it, the less and less bearish I really am on it. And you know, like I say, I don't know where there's supposed to be another entry for the rest of this move or anything like that, but the really biggest loss in retrospect has been giving up trades, not keeping them. Like the uncomfortability that will grow on leaving money on the table, it's less challenging to be in and be paid for it than it is to be, you know, look back in retrospect and think, I knew the whole time that this was what was going to happen, and made it very difficult for me to be part of it. And I'm like, that's the crazy part about it, is now we're making this 261 and the rest of that journey's been made. We can see anybody that took the 61 is instantly profitable. And I mean, I could see this. I mean, I don't even know, was it 100 points in advance that we were going to do that? Over 100 points in advance that we could make that drop. And I mean, when somebody shorts it, like I said, they didn't need it to go all the way down to here. And like I said, they could have it come just a little bit of the way and make it safe. I was already concerned with it 100 points ago, with it being able to cause trouble for people that were trying to short it. So, being aggressive with protecting the trades and so on is really important. Yeah, I don't know. Some days I wonder, maybe I just have to reduce the amount of things that I say to enforce the points even more. So like if I speak less, like I've been trying to do it in the chat. So once I posted the thing that really mattered, I didn't say anything else. So we can see well in advance again that the 261 has now presented the biggest drop that we have here. And I'm like, do we expect the 261 to work like that next time? No. Like there will be times in the future where I might hate the 261 and never use it. But right now, I understand the relationship between them, and this has happened. This motion right here has happened. The motion that we drew in originally has now formed, and if I just drag that over, I mean, have we done exactly just that? In my opinion, it has completed. And we can see its reluctance to get back to the official B point, I create my strategy on a daily basis, and I say that every day because people insist that I have to be like them and have a repetitive, predictable strategy that makes it easy for the market makers and institutions to anticipate my actions. And I'm not like them. I'm not like that. I don't share that with them in any way. I'm completely different. I'm actually against them. It's not only am I not like them, I actively despise the way that they are and have nothing to do with it. That is the way it is. I'm actively against what they say. I don't like their news. Everything that works for them does not work for me. And I don't learn from them. I don't laugh with them. I don't love them. I am not part of it in any which way, shape, and form. I want to make that really, really, really clear. Anybody can not try. Anybody can slack off. Anybody can make a serious thing into a joke. And I just take offense to it. I don't do that. So all of those things and all of those teachings and everything that I find worked in the past, I appreciate the people that put in time to teach and so on, but I don't find the teachings relevant in 2026. Like I think that if you take the literal teachings of the 80s and 70s and so on, like we've adapted and upgraded significantly to the point that if we try to assume that those strategies and methods are relevant on a constant basis, like what people make them seem, like they have to be still in play on a constant basis, because when they learn something, they think they have to literally implement it all the time and that's going to be used on a constant basis. And it's the farthest from right. They become less versatile when they learn something because they want to keep implementing it. They stop learning other things in the name of repeating what they know. We've learned in every profession that's wrong, and we don't do that in any other profession. Why do they do it in this one? Well, because it makes it easier for people to take advantage of you. There's no more predatory fucking business than this one, where the lack of information and gullibleness and ignorance of the public is used against them on a daily basis. An incredibly boring consolidation again. Another buffer day, essentially, that many of the people, the only way that they could benefit from most of the value today is to have been holding from before again. So it just goes to show that they're holding and that they're still holding and still throwing hundreds of points on top of their firm, on top of all of the assets that they've ever made. They're still just pushing strong through the highs. And much of what we have here could be overlapped, sure, but it won't be before they sell it. At the end of the day, it's very likely that they're going to protect their profits by selling some and mixture of hedging as well. So we can see that just like a normal shakeout pattern, like very, very, very similarly, the highs are higher, the lows are lower, and it's just a shakeout pattern. Like the whole raw chop, it's not meant to give people a lot of money, it's meant to make them pull their hair out. And it'll just become another day of our past that we won't necessarily feel anything about. So that's one thing that I find very interesting about it, is I'm confident that we won't feel anything about it in the future. So feeling anything about it now is just a waste of energy. There's nothing to think about in regards of strategic movements, like, you know, if you're not exposed to anything that's of value, and if there is no value to be exposed to, then patience is the biggest key. Obviously there's a trend, and coming back into the middle is a normal thing, but I mean, like, when we talk about value, I'm like, it's very difficult to say that now, in the most risky time in the world, the highest time that it's ever been to go long, that now we want to try the hand. And I'm like, it's obviously the hardest. I'm like, who knows when we'll be back in an environment that's as safe and easy as the one we just came from. Like, what if it's gonna grind like this for a prolonged period of time, if a lot of the movements that we do up here are actually really low volatility, you know, of a defeated marketplace, a conquered marketplace. Because in my opinion, it is a conquered marketplace. They own all of it right now. So we play their game when we get involved, and not a lot of people are playing. So if you play big, then you show up, and it takes patience to go through those environments. But, you know, it's hard to say that moving in the other direction would make these guys more money. But at the end of the day, when we do move down, every hedge they've ever taken has always meant new highs after we're finished with it. You know, who's to say that the next movement down won't be, you know, a hedge too? Like, this right now is an increase in volatility. Like, it's effectively difficult. It's making it difficult for people, as it usually would. I find it likely to still break the trend, but not without this difficulty first. We can see we've done 127 to 61. We've almost hit the B point. This B point's a little bit more attractive, in my opinion. The green zone. You know, to turn it into something that's a little bit more neutral, like a purple zone, something that we can come back to. I find it very likely that we will. It's like, will people get on the train with that after being, you know, so slow and stagnant for so long? Will they be able to just wake up and, you know, get involved really quickly? You know, at the end of the day, it's hard for people to buy on top of B points. We went down, but didn't go down long enough or far enough for people to be able to catch the B point from the morning. We didn't go down far enough for people to catch the 188. We didn't go down far enough for people to catch the 61, looks like. So these are done now. Now, who's to say we don't do the same thing in reverse and just come all the way back up to this old 61 from here? You know, making this an attractive point to get to. If we break trend from here especially. But there's no reversal to the 61 if we're not breaking trend from the 141 though. In that general area. We've got maybe, I don't know, 10-15 minutes before we even meet the trend if we're going to break it from here. We could break it from higher, but and it would take less time. So yeah, what would that translate into? You know, a further 60 points to the target. So we hit the B point, we're gonna get that 60 points. I'm not even taking a picture of this. It's done. You know, this is where it's supposed to be. Hopefully it served you well. At the end of the day, there's no better way to see it than for this to be seen as the valuable point. Now it's finished.